Hey everybody, welcome to Random Gleanings. Chris, something happened pretty dramatically 12 months ago. Tell us about it.
12 months ago, this week was the bottom of a pretty vicious stock market decline. February 19th of 20, the market hit a high and in 18 trading sessions dropped right at 30%. It was fast.
Super fast, super fast. With all the excitement and roller coaster ride that presented, I just thought we'd take a chance to look back over the last 12 months and answer a few questions. So let's start. What was your favorite chart or stat that you came across covering the last 12 months?
So, the first is that if you look at pre-COVID highs till today, even, it looks kind of like not an average year. It looks like a decent year, but it doesn't, just blow you away. If you measure from the bottom, the numbers are pretty eye-popping. But I'll share with you that the chart or stat that I pulled out was that even though the S&P was down 33% at the worst, there were a lot of companies down a whole lot worse than that. Let's see, Bank of America was down 48%. Whirlpool was down 56%. Pulte, a home builder, was down 62%. Boeing was down 68%. No one really traveling. Royal Caribbean was down 75%. And worst of all in the S&P was Caesars Entertainment, down 85%. COVID and casinos do not mix. And the big takeaway for me is, individual stocks, not that they're bad, but they do widen the range of outcomes that can occur. So when you own them, if you own a few, you can get decimated in a hurry, which is why we use diversified portfolios and instruments.
I pulled out one comparing or overlaying charts of earnings per share versus the change in price over the last 10 years. And to me, it just kind of summarizes investing in the market in that that the dark blue line on this chart is growth in earnings, and it just pretty well supports the growth in price, the light blue line, which to me is the whole reason that we invest $1 today, expecting that it will be worth something more in the future, because it makes sense. So. And then too, that nasty hiccup there in February, March that you just spoke to tells us why the market sold off, because people anticipated that earnings weren't going to be there. And we're just so glad that obviously they've turned around and we find ourselves on firmer footing again, and the market has reflected that as well. So
For sure. So what's the biggest lesson you've learned in the last 12 months?
Some of that's reflected in that chart as well, or certainly reflected in what you said, in that the economy is not the stock market. I think we oftentimes equate the economy to what we see locally, from barbershops to restaurants or whatever. And those guys certainly experienced a pretty severe bruising over the last year. But the stock market was positive despite what we saw as a terrible economy. And, if you dig in, you realize the stock market, using the S&P 500 as the proxy, 5 companies make up 20% of that value. Or another way of looking at it is 457 stocks make up the bottom half of that index, in which case, a few can be up and a vast majority can be down. And if the few are up well enough, then, the market's up. And so it's just a healthy reminder that, you can't necessarily predict what's going to happen in the markets just based on what you see around you.
Yeah. Assuming you know what will happen next, I don't think anyone would have expected last year that stocks would be way higher a year later, but they are. What I learned was, we've known it, but you got to control the controllables, right? So rebalancing, that is selling bonds that really didn't go down in value last year, and stocks did go down in value, rebalancing and buying stocks with money from bonds added about 2% to the bottom line if someone did that in March of last year. We rebalanced in late March. It definitely helped for the year.
Looking forward, what would you guess will be the biggest market story 12 months from now?
So, you know, guessing the future is always challenging, as we just said. I'd guess potential for inflation in all forms. Listen, inflation isn't necessarily bad for the economy or markets. Markets may not do as well. But, listen, households and institutions have gobs of cash that's basically earning nothing. And that should cause some demand somewhere. Markets, consumption, opportunities for growth, right? I think pent-up demand for travel is going to be pretty astounding to watch. I mean, we all hear the words, the Roaring '20s, and think about the 1920s. That may be the Roaring 2020s. We'll see, right? But I think prices will rise in travel to make up for what's lost last year. And that won't happen all in one year, but I do think you're going to see some inflation in those costs for sure. And then housing prices, I think, probably continue higher. The Fed's committing to keeping rates relatively low. A 30-year mortgage is set off of a 10-year government bond. Which right now is still below where it was at the end of 2019 pre-COVID. So people may travel more, certainly, but I think lower than average interest rates and mortgage rates probably keep the housing market pretty tight.
Well, you stole my thunder. I mean, and it seems maybe the obvious answer, but I'm on the travel and leisure camp. That's probably the biggest story. Who knows? Who knows? But I'm anxious to find myself out of town at some point this year, as I know many people are, and as people gain more comfort around staying well when they travel, I think that's going to pick up in a big way. So,
for me, for me, I mean, the big question is, will stocks go up? 2020 ended up being quite good despite so many challenges. And, it's always possible that the economy improves this year while markets digest last year's gains. It's tough to say, but, rising rates and somewhat higher inflation expectations are a good thing for the economy, and over time ought to be a good thing for the markets as well.
Got anything else as we head into spring?
Nope, just glad to see some green leaves and hopefully some flowers very soon. The azaleas are coming.
Longer daylight. I'm happy about it.
Oh, man. Golly. No kidding. Thanks as always to everyone. We're grateful to you for watching. Take care.